Hard copies of the slides, I'm not sure. I can certainly bring that up with DB. And yes, the recording will be available, and that's great, Ray. Great question. Recording will be available. I encourage you to go through it again at a slower pace and take notes. That's awesome that you want to do that. And let's see. When I say, let's see, recognizing extremes, is that the same thing that DB called a leading base in past training? Yeah, I don't know how to answer to that because I'm the context of leading base I'm not quite sure of. When I talk about an extreme, I'm talking about he says no, that's kind of what I thought. I'm talking about a test, a probe into an area where price has not been before. Buyers or sellers are testing, they're probing into an area, into an extreme of the day for a month, et cetera, et cetera. When I say weak, am I referring to the colors, the math differential of the prints? Yes. And you know, one of the things I truly, and I don't just say this because I'm working with OFA, it's the reason I'm working with OFA. The thing that I love about it is their algorithm and the fact that I can customize my colors so that I can take more thinking out of trading and I can react to what I'm seeing because it is doing the work behind the scenes once I've set it up. I love it. I love it. I love it because trading takes a whole lot of concentration, especially when you trade reading the print and using order flow, because it's a lot of numbers to be watching. When I can find an area and I can identify what a market is trying to do and rely on the colors and the software to tell me if my scenario is occurring, where I don't actually have to read the numbers, I can see strength and weakness. Oh my goodness, it was a complete release of focus that I didn't have to have anymore, and I could start looking at the print once I got into a trade. So yes, yes, and yes. When I say weak and strong, I'm referring to the colors of the math and the differential of the prints. Okay. Spoofing relates to the dome. Yeah, okay, I understand what spoofing means. When you've got a lot of ghost orders sitting out there in the dome, and as price starts moving up towards that price, the closer it gets, they take them away. Yeah, that's one of the reasons I really don't put a lot of my trust in the dome because of spoofing. It's possible. I think the only place, in my opinion, the only place that the dome is appropriate and useful, and this really you need kind of level 2 data. The only place that is useful is really to once you have a balance area, and for example at the top you can see buyers, bottom or at the bottom you can see buyers, top you can see sellers. If you have a lot of sellers at the top of a balance area, and you know sellers are selling, and you can see a lot of limit orders at the buy at an appropriate stop level, then the second level dome information, those limit orders are probably stops, and as they keep growing, as the longer the rotation happens, those are likely valid orders. So that's the one place I would say is there's some value there. Right, follow the print, not the orders. Follow the print. Always follow the print. And again, so why I'm spending so much time here is because the print doesn't lie. And again, is one of the things you're going to do as you go through this is, again, you're not going to win in every single trade, but one of the greatest benefits to trading this way and learning to trade with the print and understanding that buyers and sellers control price movement is when you focus on the print and you say, this is my truth, this is my truth, this is my truth, and you let them tell you what's happening and you become objective, you will start to see and feel a greater sense of control in your trading than you've ever had before, because you will understand what to do when buyers and sellers are telling you something. Again, you get into a long trade, it doesn't mean that you get out of a trade if there's more activity at the bid. And we're going to go through this as we get into trades. all it's telling you is you get in long, and all of a sudden the price starts coming back, and you start seeing activity at the bid getting heavier and heavier. All it tells you objectively is, okay, I have more risk. There's more risk because there's more pressure. I need to make a conscious decision relative to my trading objective, what I want to do with this. Is it being held? What am I seeing in the offer? We're going to go through all that and what to look for in the print once you get into a trade. All right, very good questions. I just like to poke over at the ES, but we're going to get into that here in a little bit. So activity between buyers and sellers is what creates the order flow. And again, I don't care if it's high frequency trading. I don't care if it's institutional trading, retail trading. It doesn't matter. It's what creates order flow. And since only market orders move price, and we care about price movement, right? That's what we care about. Then we use the OFA tools to represent the auction or the prints traded at the bid and the offer. Now, there's this thing, you know, reading order flow, and everybody wants to be able to read order flow, read the print and read it. But what I would tell you is reading order flow is both a process and a point in time activity. So, for example, what I do when I'm trading the ES is I'm usually up, I'm on Central Time. I'll try to convert this to Eastern. I am up by 7 in the morning, 7 Eastern, 7 a.m. And I will look at the overnight, and I will mark certain volume spikes in areas of interest in the overnight. And then what I start doing at about 7:20, 7:30 in the morning to about 7:45 is I start looking at the auction, the print, the order flow, and I start looking for additional volume and US. We're going to go through this again, so don't feel like you got to take all the notes here. I start looking for the US market to start to get active and engage in the ES. And so I watch the print and I look at the volume and I see something in there and I say, oh, that's great. Here we have a little bit more volume here. I can see the US market starting to wake up and start to get involved. What's that doing? What are they trying to do and how effective are they in doing that? Oh, they're pretty effective. Their price has been moving lower. I can see buyers stepping in while they're holding price. Something good to know. Now I'm going to start watching as more and more volume starts coming into the market. And we have this pre-market session that goes on all the way up to the U.S. market open. And by the time the market open happens, I have a pretty good sense from reading the print, at least in the pre-market, what the U.S. buyers and sellers are trying to do to price. Right? So it may look like in the print, as I read it, it looks like buyers are holding. It looks like buyers are active. They're engaged. And so what I'm looking for now in my trade plan is I'm looking for a level below in which I can take a long, a potential long. Now I'm still going to go back to the print and identify that the print is confirming a long, but I'm using it as a process. I'm using it as a process to start to look at, all right, I see some volume coming in. I see the cluster analysis. I see what the effect is on price. I see where they're holding. Okay, this is what it's telling me. And so once I get to the open, you know, it's sometimes even prior to the open, I have a pretty good understanding of what they're trying to do. And if it's different than what I've read up to that point, then I can do something with it. Right? If price comes to an area where I'm looking for a long because everything up to that point has told me that buyers are holding, they're getting aggressive. When they get aggressive, they can actually move price, they're effective. And now I'm looking for an area to get long. So I'm looking for some level of test lower to get long. And the print confirms I can get long. If that changes and buyers all of a sudden get weak and they start relenting, I can effectively manage that trade. It tells me something about the day. And it tells me what my next step is in trading and in the market. And we're going to go through that. So order flow is a process. And sometimes it can be done in a point-in-time activity. So for example, when I'm looking to get into a trade, I've picked my level, right? Because I want to buy with buyers. I want to sell with sellers. But not just at any given time. I mean, if you look at the ES right now, let me get a volume profile up here. Now, one second. Let me just show this to you. Like I said, I like to use live data for teaching. So let me grab the volume profile. So what I can see, let me bring this over here. In the profile is, and we're going to go through the structure of the profile tomorrow, I can see a very balanced morning in the profile. And I've scrunched this all up to get all this on one chart. But I can see a very balanced profile. The volume point of control is down at 22 at this level, 22. And what that means to me is right now this is most fair price. And so this market is telling me right now that these participants are finding balance at this area, and we're in a balance area. We have rotation. So to tell me what my next trade opportunity might be, or what I might be looking for in terms of a trade opportunity. So the volume profile starts to show me structure. If I open up the prints, the print starts confirming that structure. So I can see weakness at the offer at the top of the range. I can see relative weakness down below. And in a balanced morning like this, what I would expect is price to move higher, price to move lower. So it starts showing me I have no opportunity. If I get in long or short right here in the middle, I'm toast. This could come back down here. It could move up there. So what it starts to show me are where my trading opportunities are and what I'm specifically looking for then in the print to confirm. I mean, and honestly, it's kind of this easy, as we're going to see, is we're going to identify our areas for trade. Trading in the middle can be difficult. We're going to identify our areas for trade. We're going to learn how to confirm in the print that the trade is there, and then we're going to learn how to objectively manage that trade. And if the print starts telling us we have more risk, I'm going to show you how to make an objective decision. There's going to take some practice there for you to be able to manage your trade effectively. But right now, this market is in balance. I see a pretty good rotation. The volume profile shows, we're going to go through a lot of this tomorrow, a very solid distribution of price. And this starts to identify where trade opportunities are for me. So my trade, like I said, the trade opportunities, I made a trade earlier today, actually last night. My trade opportunities really are up here or down here. When I look at volume point of control, which is actually now moved up almost in the middle here, 2375, I just simply can start reading the prints where I have opportunity or where the market gives me opportunity. This is point in time print reading. Reading the market or reading the print as a process is something different. That is taking a look at, for example, I can see sellers here. I can see in the print, and we're going to go through this, but I want to give you a live example. I can see in the print sellers really pushing, really pounding on the bid. They went weak, moved all the way back up, moved up to the top. They went weak. Buyers went weak. I have a market right now in balance. I have no trade opportunities in the middle. Anything in the middle is a risk. My trade opportunities right now are on the edges. So when we get to an edge, my using the print as a process tells me I have balance. Using the print as a specific tool tells me I have trade possibility. For example, right here, when we had weakness and strength at the bid and the offer, right here. And I would be trying to manage this trade back up to this area, taking some profit at the VPOC. So reading the print, and a lot of people talk about, reading the print and using it a lot of times as a point-in-time activity. However, what I will tell you is that reading order flow as a process, especially when you know when to look at it and what to look for, as buyers and sellers get aggressive, you can really identify the other side of the question. Is there two questions you're always asking in trading? What is this market trying to do? And by the market, I mean buyers and sellers. What are they trying to do? And you can see that in a structure chart. You can see that in, you can even see that in a candle chart. What are they trying to do? Price is going up. Okay, they're trying to bring this higher. The second question is, how effective are they in doing what they're trying to do? And the best way that I found in actually determining that is using order flow as a process as you're going to look at it anyway. But as you go through the day and you look at where buyers are getting strong and where sellers are trying to get strong and where they're pushing more volume, watch how effective they are in actually moving price. And that's going to tell you a lot about what the market is trying to do and how effective they are in doing it. And if they're effective, guess what? You're likely to have a trend. You're going to have a trend. You go back to one of your guiding principles that says price will move in a specific direction until the other side steps in to shut that movement off. So if I can see sellers coming in, pounding the bid, pounding the bid, pounding the bid, and they're actually effective at moving price, then I have sellers being effective in some form of a trend, and I know price is likely to go in that direction until the other side steps in to shut that movement off. So what am I looking for? Well, number one, I'm looking for a short opportunity, possibly on a pullback, and I'm looking for responsive buying. I'm looking for the other side to step in and hold and start to prevent sellers from actually making progress. When that happens, red flags go up in terms of risk to the downside. Doesn't mean price won't keep going down, but as I'm reading the print, that tells me, oh my goodness, we have buyers holding. Any further movement to the downside might be at risk here. Or I need to keep watching. If it comes down and I see more responsive buying in terms of actual price movement, I know buyers are stepping back in, especially if it's at a level I'm looking for buyers to step in at. So again, reading order flow, it's a process and it's a point-in-time activity. And as I use it as a process and I confirm with the volume profile, it not only gives me places of opportunity, but it helps me confirm when it comes time to looking at point-in-time activity in the print. It helps me confirm if that order that I'm placing is a good order, a valid order. And I would tell you right now, ES just moved back down to the bottom of the day, and high probability that price is coming through the bottom for those of you who are watching the ES. And we're going to go through that and why I can tell you there's probably about an 85% probability that price is coming through. I don't know if it's a tick. I don't know if it's a point. I don't know if it's 10 points. High probability that price is coming through the low on the ES right now. And we're going to go through that. So let's see. Yeah, I will go, Michael, I will go through all of my chart settings. Absolutely. The other thing that I will do is make my my templates available. Yep, so you can have all of my templates too. Very possible a settlement test. That is correct. I have a just for your information, I have the closing swing low on Friday was at 1918, and I would look for buyers to step in between 1918 down to potentially 1725 level. So. You are welcome. Yeah, it's not just my goal, and this is why we're going to do some follow-up sessions and you know, like I think DB talked about, and I already have put some videos out there. I'm going to keep recording and posting my videos. And as I said before, I think I said to Friday's class, it doesn't matter if my videos are a year old or 6 months old or from last week. When I do a video, I show you what I'm looking for, what my context is, why I'm getting into the trade, specifically what I'm looking at in the print, They're all relevant teaching pieces of information. What it isn't is, hey, this is right now at 10:38 Eastern AM where I'm expecting price to go. But they're all relevant teaching materials. And the reason is because as long as the markets have existed, they've always been auctions. And the principles of the auctions have never changed. So it's always been a push-pull relationship between buyers and sellers. And when buyers and sellers are active, and you can see it in the print, it doesn't matter if the lesson was from a year ago or a week ago. It's the same lesson because the same fundamentals apply. And once you get that, once you understand that, then you can start really taking, it tells you understand the principles, and you can really start taking this into other instruments. All right, so I've spent a lot of time on reading order flow as both a process and a point-in-time activity. The process of reading order flow provides context for developing day. When I talk about the process of reading order flow, again, that's me talking about, hey, I'm looking at buyers and sellers over time. I'm looking to see where volume comes in, and I've got a super simple tool. I mean, you won't even believe how simple this is. Just to give you a flag, a heads up when volume is coming into the market. It's not going to tell you. It just is a flag to go look at your print. That's all it is, and we're going to go through that. So the process of reading order flow gives you context for the developing day. It allows you to look at the volume profile and say, oh, I totally understand why price did what it did. I understand what buyers and sellers are trying to do on this day, and it makes a lot of sense because you're going to get confluence with the volume profile. So reading order flow as a point-in-time event, again, is for trade entries and trade management. So again, reading order flow, two things: getting context to identify trading opportunities. And when we talk about reading order flow as a process, we're talking about how effective are these buyers and sellers being. It's the second part of the question. What are they trying to do and how effective are they? Order flow provides that context, and then point in time is relative to entries and trade management. Okay. As a process for context, right, we use order flow chart and a structure chart and the volume profile to gain an understanding of buyer-seller effort and, again, effectiveness. How effective are they in actually moving price? When you see effectiveness, when you see buyers being very effective at moving price, especially on maybe lower volume, that tells you that you want to look for a likely long. You're looking at the volume profile. As long as you've got room and you can see that the market isn't, buyers aren't done to one side, and your best opportunity is going to be on a pullback, and you want to look to jump on a trend. A lot of times we won't know if a trend is starting, but we all know the trend is your friend, and there are some people who just love trading the trend. This is where we get context for that trend, and then we use the specific order flow chart to get us into a trade to take advantage of that trend. So in addition to the order flow, OFA provides, at least what I feel, two other very important indicators. I've talked about them. They're the volume cluster analysis and the momentum analysis. So as you're looking at the print and you start to begin to understand how to get context of what the buyers and sellers are trying to do and how effective they're being, now we take these other two tools, which are the volume cluster analysis, that takes in any given bar the majority of the volume, tells you, is this buying